Good morning, ladies and gentlemen. I am Béatrice Gravier, the MIPIM Sales Director, and on behalf of the entire MIPIM team, I'm very pleased to welcome you to MIPIM 2011. Germany is a key market for the European real estate industry, and as a consequence for MIPIM, German cities, region, and private players have been a key contributor of MIPIM, and this is so since the very beginning of MIPIM. This is why I'm very pleased to announce that Germany will be next year country of honor at MIPIM. A committee gathering 16 key German public and private players have been created in order to help us define a dedicated program which will promote the German real estate industry to the entire MIPIM community. This year we don't have yet a fully dedicated program. You understand we will have it next year. But we have a great conference dedicated to the German market, so I'm very pleased to hand over to Mr. Hardebusch, Editor-in-Chief, Immobilien, Manager Verlag, who will moderate this session. Thank you all for being here today. Enjoy the conference, and I wish you a good and profitable MIPIM.
Thank you very much, Béatrice Gravier. Welcome to our panel session. The title, Between Shock and Profit, refers to the fact that German investors in the last decade had two extreme experiences. First, the good experience, the benefits of international investment and the international exposure and diversification effects, and then the bad effect of the financial crisis. The experience that exposure in foreign countries can lead to losses, to hard problems, and so on. And so I'm happy to discuss this issue today. What did German investors learn from this experience? What are the strategies today? What kind of assets are they looking for today? What kind of places do they prefer? And for this, I heartily welcome very experienced CEOs and German investment leaders. To my left, from your scene to the right, is Mr. Hermanns-Engel, Managing Director of Union Investment Real Estate. Here is Mr. Karsten Hinrichs, CFO of ECE Projektmanagement. Welcome. And Mr. Gerhard Nieslein, CEO of IWG Immobilien AG. Before we start the discussion, I will ask you for a short introduction of your company, what you're doing. Maybe you start, Mr. Nieslein.
IWG is a public quoted company in Germany, one of the bigger ones, and we are a co-investment platform. Together with our institutional investors, we buy and sell commercial real estate. Strength of IWG is our asset management base. We have 17 offices all over Europe, and we do asset management and especially leasing ourselves. Total volume under management is around 22 billion.
Mr. Hinrichs.
Thank you very much. ECE, you might know the company is already for 40 years in the market for developing and managing shopping centers. Our main perspective is that the company or the project we develop, we keep in our management as well. We organize our structures that our investments are realized with investment companies, with institutional investors and private investors as well. And as we own by a family office, we also keep some shares in our investments. We are managing more than 130 shopping centers in over 12 countries, so I think we have quite a good insight into this market.
Thank you, Mr. Hermanns-Engel.
Yeah, happy to be here today and to present to you Union Investment. Union Investment Real Estate, formerly known as DIFA, is one of the market leader of the German open-ended fund industry. We are running 6 open-ended real estate funds. We are internally positioned with 2 German investment companies covering the retail business and the institutional business. So we have a market share in Germany of roughly 20%. We are dealing with 307 properties worldwide. We are invested in 26 countries. And so our assets under management are a level of 19.3 billion euros. And the value of the properties inside of this asset under management dimension is roughly 18 billion.
Thank you. So it's a lot of investment power gathered on this panel. Mr. Nieslein, if you look back to the crisis, what are the key lessons you've learned?
The key lessons are that the systems which were created, especially with mark-to-market valuation, IFRS, are not really helping the investors. It's a kind of transparency which is very, very dangerous. I meet my former colleague at Helaba when we were doing real estate financings there every Saturday morning, and we are discussing how we treated the crisis in the midst of the 90s. And when we came to the conclusion that somebody is going to pay his interest, everything is fine. The world is today very different and has become very, very dangerous. The basic of the lesson is we learned that there's a difference between value and liquidity, and these constraints in liquidity caused lots of problems, and I think we will use the next 4 or 5 years to change some of these rules.
Okay, Mr. Hermanns-Engel, for the open-ended funds, the crisis and the time before has 2 sides. Before you could sell a lot of your portfolio, then you, like others, got under pressure, of course. But if you refer to what Mr. Nieslein said, is that true?
Yes.
IFRS and so on, the dangerous transparency?
Yes, of course, this is true. You see that with the German open-ended fund, we are still attached to a longer view also on value. We have been able to see and to protect value due to the evaluation system, the legally foreseen evaluation system. So what is the crisis showing to us? That we have to evolve, that we have to become a more active portfolio manager than in the past. And we showed it already, not only by having been able to go for bigger sales in very special market condition, in over-equipped, high sophisticated financing environments with exaggeration. So we had to clean some of even the German portfolios. Afterwards, we have been hidden by a rarity of the core product worldwide, and the reaction of the investors worldwide has been to be risk adverse, so more competition in the core segment. So know your partners is very essential, especially when you go for the global move. And we have been invited in 2005, 6, and 7 to go for more emerging markets, to go worldwide. We have been first movers in Mexico and Chile. So we had to react, and I think we reacted properly. So liquidity is an issue, was also an issue in the German open-ended fund industry, and will forever be an issue. Of course, we had some challenges also in our homeland with the structures, the legal changes in law. Transparency was a longer discussion during the year 2000, 2005, 6, 7, and so on. So we achieved a level of transparency. And, but also a move has been requested to become more market to market. But what was for me a very extraordinary situation was the ULI conference in San Francisco in 2009, where people from US explained how to deal with risk management, how to deal with real estate and risk management, and they exposed 85% of the structures as open-ended funds in the middle of the US way to deal on a more short-term driven way with real estate. So there's a lot of lessons to learn. We have been part of the party in 2006, 7, and 8, and now I think we are wiser than before.
Wiser than before and part of the party, Mr. Hinrichs. An INREF study says, the investor survey says the favorite combination for investors right now is Germany and retail. which might be good news to you. Will you sell now your German retail and take the money for international expansion?
I think the amazing thing is that not just Germany is in the focus. After the financial crisis, the big issue was that everybody changed its attitude to look at stable cash flows. I think that was one of the big situations which has changed. And as far as we are concerned, our products, our shopping centers in Germany are very stable in their cash flow structure. So we have a lot of tenants, and it's amazing that people discuss the financial crisis just on the financial side. So the real estate side is also quite important. So the quality of product is, to me, the main issue which should be focused on. And as far as I can see, we can look at the products. It doesn't matter if it's shopping center or office buildings. The question which is not really can't be answered is how stable is the financial market.
Thank you, Mr. Nieslein. The quality of product remembers to the core thing. Everybody's looking for core right now, so prices for core objects are quite high. You have a certain amount in your portfolio of added value objects. Will you expand this?
Yes, probably we will. Right now we have a difficult situation because there's much liquidity in the world and in Germany looking for core product. And in combination with the relatively low interest environment, the pricing of this core investments everybody is after is quite on the high side. So you have to look for other opportunities, and we are solving this problem in looking around in our 15, 17 locations. Where's the cycle interesting for our investors, and where's product well located with a little defect being added value? Where can we add something with our asset management expertise? So the answer is yes.
But I guess money is the limit, isn't it? If you want to invest against the cycle or anti-cyclical, you need the banks on your side. Are the banks on your side with this strategy?
Yes, definitely. Because the money is right now. Money is not the problem. It's the product. I think everybody here can raise all kinds of money if there's a decent product out there, if there's a story out there. 50-60% financing is readily available to everybody. This is not the issue. It's the story. And with IVG, I think we have a little advantage of this co-investment, similar to what DC is doing. We say we participate in this deal with 5 to 10%. We are not only advising, but we are actually in there with our own money. And if somebody looks at our annual report, sees how this success of the company then falls down to my bonus and the bonus of the next management level. So that's a certain interesting alignment of interest, which our clients estimate very highly.
Yeah. Acting anti-cyclical, Mr. Hinrichs, you established a platform in Spain. Is this a kind of riding the cycle?
I think that's one of fortune for us when we look at the financial crisis, that we got the opportunity to get a step into a new market in Spain. So we bought the management platform from ING, Oxidaico, to get very deep insight into this market. It's a very competitive market, a very difficult market, but I think if you want to create value in some way, then you will find opportunities, especially in these markets. But as you say, the opportunistic way of investing. We also do some own investments maybe in Hungary, where, as far as I can see, very few equity or debt partners would be able or would be convinced now to invest in these kind of markets. So at the moment, everybody's looking from a very far view on the country and sees the macro details. And normally we look at the micro location of the product, and if we are convinced that will give us the support to realize our projects, then we do that. So I think the problem is that most of the partners who are in these markets, doesn't matter if it's the equity or the debt side, are more pro-cycle investors.
So to act anti-cyclical, you need equity. Union Invest is investing almost 100% in equity. At least it is can be read on your homepage. Is that the good basis to act anti-cyclical?
I believe it is a good basis. So you know that we are obliged to keep not more than 50% of financing rate inside of the portfolios. When you go into the different products, you see normally a product is showing some 30, 31, 35% of financing rate. There's one product is showing 40%. And we are using financing, especially for optimization, of course, leverage, and normal leverage, but also for the natural leverage element to protect the currency, to protect the product against the currency element. So we collected, I think, 68% of the overall collective to industry last year. And of course, as Mr. Nieslein explained, the equity line is not a problem today. The problem is then to find the core products at an acceptable pricing. Coming also back to your question about are you able to integrate risks in the portfolio? Yes, we are, but our perspective is to find at the end a core product integrated in the portfolios. So going for letting risks, why not? Are we pushed to go for letting risk now more than in the past? Probably yes. Are some of the markets, do we have positive visions? Of course, we have to have positive visions before going for this kind of risk. So development schemes inside of the portfolio, normal thing. We are attached to the quality. When you're looking for quality, the quality is not probably as existing products, not so much available in the market, so you have to go for a riskier ticket. And we are doing this worldwide. We just finalized a development scheme in Kuala Lumpur, for instance. We do our own work in our own portfolio in Hamburg with the Emporio Tower. So we are used to take quality expectation together with some riskier elements.
But isn't it quite risky to invest, for instance, in Chile or in Mexico if you have one or two objects there?
But you see,
isn't that a dangerous exposure in itself?
No, we don't think so. We do a pre-qualification, a pre-scanning of all of the relevant markets worldwide. So when we have a qualification of core markets, core plus, and riskier market, and even in the core market segment, we have target markets and less targeted markets. And when you're talking about Mexico and Chile, you see, for us, this was the answer in 2005, 2006, 2007, in front of an overheating of the local markets here in Europe, for instance. So just a few numbers. So we are invested. 40% of our investment has been performed in Germany, 60% outside of Germany. Europe is representing some 81, 82% of the portfolios. So our investment behavior of last year, 60% realized in Germany, and this is matching finally the interest for Germany, 40% outside of Germany. Coming back to the ECE element of the product, we acquired for 1.6 billion euros of products, and more than 900 million have been invested in shopping centers. So diversification, coming back to Chile, Chile is for us sure an emerging market element, but we are able to find stabilized incomes in Chile. Is it too risky? No. And it is also always an additional component of the portfolio. We don't have specialized products with South American real estate or Asian real estate. This is a mixture, high diversified approach to the product line. And when you see, where do you see in the world a product showing 16 different countries integrated in one single product? This is, I believe, unique. And of course, you have to play this global assumptions and global approaches.
A global player, Mr. Nieslein, the portfolio of IVG itself is, I think, focused on Germany, maybe 70–80%, if I'm not wrong. Is that a reason to diversify, to sell more in Germany and buy more somewhere else?
No, I think we are doing the odd investment in other countries together with our investors. where we participate in these individual funds or deals with 10 to 20%. So there will be an increasing component of European investments and US investments, but the 100% investments will be done in Germany, because we see a very interesting development. As it was said, it's the flight for quality, it's cash flow. We all learned the lesson in this very difficult times, 2009. The only properties which could be liquidated were the very good ones. And as the next crisis is coming somewhere, Germany seems to be an interesting haven for capital preservation. It's not so much 20% IRR. It's I would like to invest in Germany because there I know I'm getting my money and my value is preserved. And this is something very interesting, and this is what we would like to play.
So Germany, it's kind of safe, but maybe a little bit boring if you refer to the yields.
Yeah, but I'm always saying boring is very attractive. Look at one of the most boring investments from your group, Deutsche Euroshop, and there's nothing more successful than these shares from Deutsche Euroshop. And this is why I think boring is very, very glitzy.
Sometimes you get bored, sometimes excited. So.
Yeah, but boring became sexy after the crisis. That's right. Yeah, it still is sexy.
But I think you just have to look. Obviously, most of our investment colleagues are in the market now concentrated on core products, looking for stable cash flows. But that doesn't mean that you just can invest in Germany. So I think we now realized an investment in Turkey. So it's a very volatile market. But as I said, I think the quality of the product is the most important thing. And Mr. Engel said to look for these kind of products, to understand the products and the markets is the most important thing.
Yes, and you see, everybody has to play his role. Boring, of course, a core product cannot show the double digits. US players, for instance, are used to bring to the investment. We acquired last year from IVG a product in Warsaw, for instance. So we are coming at the
You didn't acquire, you stole it.
It was a nice negotiation.
No, it's quite interesting, and this is what we are seeing all over the place. People are saying England or Paris is too expensive. There are companies around like us last year where we had to raise the liquidity because we had to finish our developments. And then obviously these guys were smart and made an incredible deal in Warsaw, a property which we would have liked to keep, but we were unable to.
I hope that we have some evaluators in the room. Next move.
So this was not an alignment of interest, but
it was an alignment of interest because the story I told the banks is when they were wondering how are we ever going to finish these developments, and we said we are going to go full cycle. We will sell our properties, we will use the cash to finish the developments, we are going to lease the developments, and then we will have the value again. And this worked very, very nicely. The banks are now trusting us again, and in this process, odd timing, we had to sell to these guys these kind of properties, and they made a terrific deal. But it worked win-win because we needed the cash to create some value someplace else.
if you look at this,
Just if you have got in our mind that then I think the next 2-3 years, a lot of securitization products are coming on the market. So I think this kind of distressed products will follow the next 2 years definitely. So I think it's Mr. Engel will get a lot of more opportunities the next 2 years.
No, thank you very much for the perspective. But you know, at the end, we are not looking for distressed real estate.
Not from us.
We will see.
if you come to retail, you have a lot of shopping centers in Germany, I think around 100 under management, more or less. You expand to other markets, so you are more forced to expand to other markets than maybe an office-based investor. And you just talked about Turkey. Isn't this is this a focus market for the future?
I think it should have been a market already for years. So we are, I think, already managing centers there for 10 years, and we have realized in another development 3 years ago. So I think it's a totally different market than you compare to Germany. The same if you watching the Poland or Czech or Hungary. So I think some of these markets are still dead, as far as I can see. Nothing is going on there because no debt, no equity, interests are coming up. But as we know from the past, after a while it will come back. So I think we should, and we can't, because when we are involved in these kind of markets, we do management of our existing products, then we open our eyes as well for opportunities in these kind of markets. So it doesn't make sense to run away or to go some other markets. So I think these markets are big enough for us.
Yeah, Mr. Nieslein, you established a fund in Paris, I think, of French real estate, right? What markets will be the most interesting markets, office markets in Europe in the next 12 months, 24 months?
And you think I should tell you now?
Yes, of course. All the audience.
I think we have at IVG a quite sophisticated system where we analyze this 15, 17 cities where our guys are leasing, and we see how incentives are going back. And for us, or for me, very important is lease negotiation time, and this is something we compare. And out of this system, we are creating supposedly a cycle where we say, okay, here, dear investors, we should do something. And in addition, let's take Lisbon. Nobody would go to Lisbon today, but okay, one here. Yeah, you're a professional. This is why you're sitting here. Lisbon is not going to disappear from the map over the next 20 years. You're getting fascinating returns in the middle of the city, and if you do your homework, I think there are some more cities in Europe where you can make some very nice returns over the next 5-6 years and play it safe if something goes wrong in 5-6 years with the financial economy.
But you won't tell us the names of the cities. Maybe you will do. What are the next coming markets?
We acquired, not last year, but the year before, a tower in Lisbon. And of course, we are still near to another deal in Lisbon. So Lisbon is not out of the range due to the fact that they are part of the PIGS. You see, our approach is core, but in an opportunistic behavior, meaning that we have, of course, our strategy fund by fund, but we are very aware that there will be some opportunities. We expect opportunities in Spain too. The Spanish economy is suffering, but this will be, I think, a very exciting market. And we keep attached to the core. So the last transaction we performed, the Zebra Tower in Warsaw again, a few development schemes in Helsinki. So the Nordics are of interest, probably not the high total return bringer on the 2, 3, 4 year forecast, but there are still opportunities in Europe, and especially also in Germany. Why not? Probably one additional information. See, the biggest exposure of the portfolio outside of Germany is in Paris, and when you go for the Parisian market, of course, Paris is the main city spot in the portfolio. But behind Paris, we are highly invested, more than 1.5 billion for each city in Hamburg and Munich. So you see, we are used to play also the German card on the security side, of course.
You have to understand that his CEO was last year elected best real estate manager in the world.
And not only the CEO, also the whole asset management company.
Mr. Hinrichs, except Turkey. We talked about Turkey, coming countries, cities of the future.
As we said, we think that Spain will be a very interesting market, Madrid, Barcelona, and also the smaller cities as well. But we have to find a very deep insight what is going on in this market. And as we can see at the moment, if you look at the leasing side, how hard they work to find their tenants for the future, I think you can see in which condition the market is at the moment. And that's one signal you can take if you want to understand the market. For instance, very similar in Central and Eastern Europe as well. Very difficult to find long-term tenants for our products. And I think we thought when the financial crisis started, and we also were thinking what will happen to the German retail market. It was amazing that this German retail market was so stable, but one explanation was that we had such a big difficulties in the retail market the last 10 years already, so that might be much better prepared for this kind of situation. So I think it's a very difficult to tell everybody just jump in this market or that market. So you have to look very carefully at it.
Mr. Nisland?
Yeah, but picking up on what you were saying about Germany, there's something which we shouldn't forget about Germany. There's a constellation which wasn't here over the last 30 years. We have so many employees in Germany we never had before. On an average, it takes 12 to 18 months to transfer this into real estate leasing. Second thing is consumer expenses are going up. When did we have this last time in Germany? Because the Germans, for the first time since I'm living in this country, are somehow motivated and looking positive in the future. So they are also spending some money. And I think we will see some totally new developments which will be transferred into real estate, which weren't there before. And on the other side, foreigners are looking at, for example, Frankfurt and saying, well, 17% is empty. Yeah, what is empty? Buildings from the 50s in off locations. But if you're looking for decent, good space, there's not so much available. And yes, it's one way for the professional intellectuals to go to Chile. But I think you could also make some money over the next 2-3 years in Germany because there's something developing which is unheard of.
Maybe one last topic, because before we open the discussion to the audience, Mr. Hermanns-Engel, the topic is sustainability.
Yes.
Everybody talks about it. Will you buy only labeled objects?
We can't. We would like to do so, but we can't. You see, the issue with sustainability is, of course, everybody is thinking about green concept, technology level, but sustainability is the normal daily breath of asset management. So you have to find an overall global approach to sustainability, social, cultural thing, architectural elements, economic sustainability. So at the end, we are dealing around the world with all kinds of certifications, and some of them are probably more marketing driven than others. When you see the level of quality you have to present, you have to create in Germany, simply by the technology rules, you are covering most of the relevant certification worldwide. So how do we deal with the issue? We created our own sustainability check by approaching a property. So we took overall a nice blend of all kind of certification, and we are trying, and with a good result, to find the green future of a building. And when we are unable to achieve a certain scoring, we prepare already some investment lines for the future to keep to bring the product in a sustainable environment on the micro location. So this does for new product, for new development. I think we are near to a situation where we request a green certificate. But at the end of the day, we are commercial people. We need to have a running story behind, and at the end, a tenant has to be willing to join the boat. And this is so different around the world. When you try to convince a US tenant to pay for some optimization of how to deal with, I would say, the water spent in buildings. So you have to keep in mind that the water is 20 times less expensive than Germany. So the behavior is completely different. And we are seen sometimes come strange guy preaching extraordinary green concept around the world. But I think this is reality, and especially here in France, I believe there's no more new development without this new dimension of green. that we will see in the very near future in France.
Mr. Niesland, you launched a sustainable fund. What is your experience with that?
Yeah, I think everybody is going after this green building funds, and legacy of IVG is that the old developments were always done with the eye on LEEDs, platinum or gold, and so we were lucky to place the last 4 developments in this green building fund, and it was sold out in a second because everybody likes a decent location plus green building.
How important is this label sustainable in the shopping center worldwide?
Okay, I think if you've got a long-term view on your product, you have done a lot of things already in the past. So I think there's one relation which always will come up: the relation between the ancillary costs and the quality of the building. So I think it's as far as I can see, it's very good for the quality of the products. That means also that the old products which haven't got, or which were developed in this kind of understanding, there's a lot of work for the future as well. So I think, as far as can see, the investment community it will cost something. You don't get something more, but it will cost something if you haven't got this kind of aspects in your mind.
Thank you so far. So, do you have any questions to our speakers here? Maybe you wait for the microphone, yeah? And please, you introduce yourself before and then.
Hello. Can you hear me?
Yeah.
Okay. Melissa Ackerman. And I have a couple of questions for Mr. Engel. I'm curious as to what your firm's stance is on investment in the U.S. markets. And also, I'm from San Francisco, and I heard you mention that you had some dealings there, and just also would like to hear what your perspective and experience was as it pertains to that market.
So we are waiting for the U.S. markets. You see, we are working hard in the U.S. market. So what's the situation? We are already, of course, invested in the States, in New York, in Chicago, in Denver, Colorado, even in Denver, Colorado, in San Diego, in Seattle. We have a bigger exposure in Seattle and also in Washington. So you know very well that this huge country is diversified in terms of location. We see the situation in Washington was more or less relaxed, meaning in terms of values and special environment created by the government and all the initiative. But there's still this big question mark pending on all the commercial real estate in the States. What will happen with the big financing wave we still have to expect, and how do we deal with this? We see signs of recovery, of course, in New York. See, of course. But we haven't seen this famous core product we are looking for so much in the last 12 to even 18 months coming out of the States. We did one single deal last year in the state, and this was let's say, an historic, arrondissement of a former deal in Washington, where we worked out the kind of structure of the past, but no fresh investment. So we have 2 people in New York looking with our local asset management partners on a daily basis in all the different corners of the States. And outside of Europe, by the way, we are still not willing to go for shopping center investments. We are diversified, so the whole retail world, in any case, in the US is a little bit overloaded again. So what are the expectations? This is one of our target markets in any way for the big global investment lines, and we are still waiting. But last year we had to leave a huge investment volume for other markets because we have not been willing sometimes, but not be able to find the right product in this country.
And then in regards to San Francisco, what was your experience with that market?
San Francisco is one of our targets. We would like to be in Boston and Washington and San Francisco. Yes, the CBD of San Francisco. You have to understand the city again and again, but we would like to go for San Francisco. But the problem with San Francisco is the quality of the properties. Probably there's all the stuff of the 60s, the 70s. Sometimes greater location. I've seen 1 or 2 opportunities last year, but then you have to be able to integrate early 80s properties with technical extensions and so on. So not really the quality we would like to see.
Thank you.
Well, sorry for that.
More questions, please? Yeah. Over there?
Sorry, over there. My name is Ekaterina Evdokimova. I'm a Russian real estate lawyer. And your view to the Russian perspectives or perspectives of the Russian real estate market?
Yes, as I said, we are looking probably around the world after 50-55 when we're talking about office location. And we are also approaching also Moscow. I would say 2 years ago we have been very close to do 2 transactions in Moscow. No? You seem to be aware. But at the end, we took a negative position in front of the market due to the huge change. And we think that for this boring end of the real estate industry, meaning the open-ended funds, that even Moscow is still not at our institutional expectations in terms of stability of the market and request. So attractive yielding, yes. Longer leases, yes. Security of cash flow, question mark. Title is okay, but very special agreement to be accepted. So we remain to the country, but I think we need a few more time before achieving a deal in Moscow. So I don't have to talk about St. Petersburg and other locations, but Moscow would be, of course, the spot for us.
Mr. Hinrichs, Moscow experience?
Okay, we are managing one shopping center in Moscow. I think so far we can see, if you look at the retail side, it's quite good quality. I've got a different opinion about developments in Russia for us, comparing financing and equity partners. So it's a very limited amount of interests to find with some partners for these kind of investments. Actually, it's a pity, but because we think that the Russian market from the retail side it's very interesting. It was the reason that we decided to go to Russia, not to China or to India. But at the moment, if I look on the time schedule, the next 2 years, I don't see investments very heavily. I hope it will come back.
Thank you.
Satisfied? Okay. There was a question over there, the man standing over there.
Hello, my name is Anton Melnikov, and I'm head of commercial real estate of maybe the biggest Russian residential developer, PIK Group. What if we offer you very boring opportunities? Would it still change your mind? We are right now doing a platform, an investment platform that will allow to go in that allow funds to go into cities like Moscow and else in Russia. So, if the opportunity is boring enough that you what is still changing?
I just would like give one comment. You see, if you compare the investment community at the moment, it's a very, very rare amount of interest to do investments in Russia. So if you look to, it's also very rare to do investments in Bulgaria. And so it's, at the moment, the most important spot is cash flows, very secure cash flows. And then you can compare it with the yield you're looking for. So I think at the moment, the markets are not in the situation. It might change, but I don't know.
Right. Mr. Nislan?
Yeah, this is very complicated because some of us have signed very, very tough corporate governance regulations in Germany. And rumors have it, if we are going to sign this corporate governance, we have a little difficult doing business in your country. I think if you would go ahead with doing some homework and letting us feel comfortable that we really can do their business and watching all our corporate governance regulations, I think it would help and we would do much more business in Russia.
Thank you.
More questions, please. Over there, the lady.
Thank you. Annika Jöres from the German news agency, the APD. You were talking about quality. Maybe you could clarify a little bit what are the latest tendencies. And is there a German demand of quality which is special or different in other countries? What means quality? Is it green building, or what is it?
You define quality?
Yeah, how define? You see, the first reaction is that when you go worldwide, they have to leave your German lenses at home, of course, up to a certain level. But I think there has been a move for quality coming from the German investors, even worldwide. So discussing in '97 in Paris, the ceiling heights was for ceiling heights. No? In the buildings was a natural obstacle for German investors for a longer time, and this pushed us probably to go for more new products and to give some positive impulsions for the developing scene in the late 90s. So there is, of course, I believe, a move, generally spoken, into for quality around the world. There is we are looking for grade A tenants, and grade A tenants coming from developed industrial countries are requesting the same kind of quality somehow and somewhere, with some individualization on the local level. So is this a German thing? German are very linked to technologies, are very linked to architectural elements, engineering. Of course, there is a kind of background behind, but I think this is really not overdriven to go with this request into the different markets worldwide.
Mr. Nieslein?
Quality to me is always quality of cash flow. It's the security of the cash flow, which is determined by releasing. So whatever we do in terms of quality is either location, releasing, ceiling height, public transport, infrastructure, all these kind of things. And this is the type of quality as we define it.
Mr. Hinrichs?
Yeah, I think the needs of the tenants are actually on the focus at the moment. So you can see that it doesn't matter if it's shopping center or office buildings, that there's some change going on, and there's the tenants also not always prepared to sign a long leasing contract, because they want to adapt their situation as well. So I think that's the actually competition between the leasing contracts and the future for the company. So I think it will a very interesting way to look at in the next 6-12 months, if we find a way that the tenants are more convinced to do long leasing contracts, and then we can see how the situation is developing in its whole way.
Satisfied?
Yes, yes.
Okay. There's another question over there.
Yes, Andrea Bugni, Italian Chamber. I would like to ask two Germans about Germany. What do you think about the residential market of Berlin as a perspective, future perspective, very, very short term or middle term?
Everyone wants to answer this?
I think Berlin is an excellent market, a very good, very stable one, and because of all these subsidies and tax advantages you had in the residential market over the last 40 years, which are now slowly running out, if you get hold of good product, there's some excellent future for this program. You will see this when the IPO of GSW is going to happen. What kind of upside this company is going to have over the next 20 years. I think good to excellent.
So what could I add? That Berlin is a fascinating city. When you are joining the city, you see first impression is this the only really big German city who is still existing. So for me, Berlin is far away from Munich and Hamburg and Frankfurt. But what is still lacking on the economic side is the hinterland, so-called. So the economic dimension of Berlin, of course, is the capital. But at the end of the day, is a lost, for me, still a little bit of a lost island. So from the office sector, it was always a little bit dangerous to deal with Berlin. But when you look now closer to the numbers, you see that Berlin recovered a lot. So when we are approaching a different location, we are not too much linked to the residential world, but at the end, the residential will go very, very well when you are also able to create jobs and to see more and more in office locations. And as I said, Berlin became more interesting, and is today more interesting than in the past when you're looking for office investments.
It would need some more jobs in Berlin and political environment and getting some more industry and so on. And skiing is a little difficult from Berlin.
There's another question here and then there, but first here. First here.
Hi, my name is Daryl Liu from Reuters. I have a question for the entire panel. The ECB last week just signaled that it's going to increase interest rates as soon as next month. My question is, what is the immediate impact on your businesses? And would this require at some point a shift in your investment strategy as well? Thank you.
Specifically on IVG, there's no immediate impact because I think a little over 70% of our interest is long-term fixed, and there are lots of caps and hedges and so on, so there is no immediate impact. I think it will help because, as I said at the very beginning, this low interest environment is pushing some prices too high for these kind of traders who are in and out and so on. So a more reasonable level interest rate will definitely help the real estate prices to come to a more decent level.
Okay, as far as we can see that everybody's saying there's some correlation between the interest rate and the yields in the market. I think it will have an impact sooner or later. But at the moment, I think the most important thing, how the financial partners, the banks, are prepared to get fully into this market. There are just a few very acting with new financing for investment partners, for developers as well. So I think if it will help to stable the market, I think it's fine. But at the moment, it's a very volatile or fragile situation. So I think the interest rate is not the big point at the moment, I see.
Okay, thank you. There was another question over there.
Yes, hello, my name is Robert Tilke. I'm from G.v. Robertson, Hungary, and my question is that all of you are present in the country in Hungary and invested or developed properties. What is your current status and opinion about the country, the leasing market, and whether you would invest further or not?
We are confirmed investors in Central Europe. The situation in Hungary is, of course, a big challenge, we believe. So the vacancy rates in your capital. We have some job to perform out of the existing portfolio already. But you see at the end, subject to the political stability, we remain positive for the country. So we are still this kind of opportunistic approach for good products. But your country is probably not on the top list. There are obvious reasons why, but we are still able to go for acquisitions there. Yeah.
Okay, we feel quite comfortable if we look at Hungary. As I said, if you look from the very far view on it, then it looks very strange. But if you look into our own portfolio, we can see how the people understand the situation, how they consume, and we have decided last year to start in development realization in Szeged. So we see that the leasing is going quite well, and now we are also preparing an extension in Budapest. So I think, as far as we are concerned, we are feeling quite comfortable in Hungary.
Same thing. We have some properties there, which we are now, because of this environment, relatively illiquid. But we feel really good about it and the future prospects. Again, a country where some homework has to be done, and then it will fly again.
There's another question here.
Thank you. My name is Jyrki Laiho. I come from Tampere, Finland. My question is about the second cities in Nordic countries. So if you think about Nordic countries, we have very stable economical and political situation in all Nordic countries. And so if that's boring you're looking, that's what we have to offer. And if you think about Finland, the only one using euro as a currency, so it's even more boring. However, these metropolitan areas, I think the best deals are already being done, so to say. So at the price of this metropolitan edge area, you can have central location on second cities in Nordic countries. How do you see the prospect on that?
The problem is that, again, I think this world is running into difficult times again over the next, let's say, maximum 15 years. And one of the lessons we learned from the last 3 years is liquidity even in difficult times. And because of this liquidity reason, I would not go to secondary cities even if it's okay and it's boring and so on. I would like to have a portfolio in about 2-3 years which I can dispose of even in the worst times. And we learned in 2009, even if you had very, very good properties in secondary cities or in off locations and so on, they simply were not liquid. And this is not what I would do as an institutional co-investor.
So it's right for Finland, for Helsinki. So the degree of concentration for your capital is huge. So we see also issues for the exit, and so a gap, a bonus by accepting a secondary city. Of course, this will be realized, but this would be not acceptable for us. But we have a general move, a switch in our general strategy for more secondary cities. We acquired for the first time an office building outside of London by doing it in Glasgow, for instance. Even in France, we are already invested in Marseille, and we consider more than in the past to go to Lille and Lyon. So there are countries who are showing secondary market at the relevant institutional size, and there we are more relaxed and sorry for Finland, for Helsinki. We just did 2 development scheme in Helsinki. We acquired. It was for us a little bit unexpected because for a long time we had only a small volume invested in Helsinki. So there are still some opportunities in your capital.
And I hope in Tampere too.
So thank you very much. Time is gone.
Thank
Thank you here for discussing. Thank you for your audience, for all the questions, and for listening to us. I wish you all a really successful and pleasant MIPIM, and have a nice day. Okay, thank you.